Hey guys, in today's Finance Friday video, we're going to highlight three sectors that we plan to invest in, and in some cases, or have already started to invest in for the rest of 2022 and maybe beyond. Now, some of you may know that we have also already posted a video at the start of the year identifying some sectors that we're going to look into, and those sectors are primarily commodities related, so like gold, um, oil, oil and gas was another big sector that we looked into. And so far, those things have done pretty well. There was a huge run up or a spike in the price of some of these commodities. Things have plateaued a little bit and decreased a little bit in some instances since the I guess the immediate shock of the Ukraine-Russia war. But I still think that it may be worthwhile to hold on to stocks in some of those sectors for the time being. But going forward now, after the advent of the Russia Ukraine war, coupled with the fact that we're seeing really high inflation in the US and in other territories, there are some additional sectors that we think will do great in this environment. All right. And so the key to surviving a high um, interest rate environment is that you have to invest in stocks or in businesses or in companies that have great pricing power. So while everything might be raising 5 and 10%, and some people might balk at the idea of paying higher prices for some things, there are some essentials that we cannot do without and prefer not to do without. And those sort of companies that provide those goods and services are really well placed to thrive in a high interest rate environment, which is what we're entering. All right. So the three sectors that we are looking into for the rest of 2022 are number one, travel and leisure. Now, that might sound counterproductive, especially given the rapid increase in oil price, making travel more and more expensive. But when you think about it and go back a little bit further, many of us have been locked up over the past couple of years due to COVID, haven't been able to travel, see our loved ones. And as the world is now opening up, and as the Western Hemisphere um, and Western countries go into their summer period, I should say the Northern Hemisphere, sorry, as they go into the summer period, I predict that despite the higher prices of fuel, people will be willing to pay it, and you can see people still booking their vacations because they've been without a overseas vacation for sometimes 2, maybe 3 years. So I think travel and leisure stocks can do very well in this environment. And well, that theory remains to be seen as we get closer to summer. And so right now we're doing our research on a couple travel and leisure stocks to invest in. Um, some of the more prominent ones are like the airlines, although I think that there's a more advantageous way to invest in the airline industry. And in another video, I'm going to show you how we plan to do that. Um, hint, hint, it's by investing in a company that actually does the airline booking, one of the major companies that does it, rather than investing directly in airlines, which is a very competitive environment. Now, if you look at the my screen, looking at the year-to-date graph of prices, Delta Airlines in purple has been up a little bit, up about 10% around February. It dipped down a bit in April and has now gone back positive for the year, around 11% as of the recording of this video, April 21st. And it is quite possible that that trend is going to continue. And 11% return in this sort of environment in airline stocks like Delta, which in my opinion is probably the best, um, at least the airline company with the best balance sheet in the US. I think maybe a worthwhile investment going forward. Again, I'm not saying to invest in Delta Airlines, but it's something to consider. And we're going to delve into that whole travel sector a bit more in a future video. The second area that we think is going to do good in this environment is the defense industry. No, it's not an industry that is very sexy, and some people may have ethical issues investing in companies in the industry, especially after watching Lord of War with Nicolas Cage, which is actually one of my favorite movies ever. But the defense industry is really critical at this point in time, given the advent of the war in Russia and Ukraine and some geopolitical tensions surrounding China's advances, for example, close to the Australian coast with their recent agreement with the Solomon Islands, I believe it was. Um, Globally, countries are gearing up and in some cases have already started to spend more on defense. Now, Germany, which has historically underfunded or underinvested in the defense sector, has pledged to increase spending in defense, and the US has already donated quite a lot of arms to Ukraine. And in one instance, I believe that they dedicated at least 25% of the Javelin missiles, I believe it was, to the Ukraine. And now, when you think about the size of the US military budget, to allocate 25% of your Javelin missiles to Ukraine is a huge commitment. And so it will take quite a number of years in this case, I believe it's Lockheed Martin that provides the Javelin missile. So it'll take quite a few years for even the mighty US to rebuild their stockpiles of Javelin missiles. And I think, you know, the whole NATO region, you could see, especially those closer to Eastern Europe, significantly increasing their defense spending. And so the defense sector is an area where I think has quite a few tailwinds at its back for the next coming years. Um, I was going through the sales call of Lockheed Martin a few days ago, and while their returns were not fantastic in terms of their Q1 sales, that was partially due to the fact that some of their components they were not able to get them due to COVID lockdowns and logistical challenges. But I think over the next 2 to 3 years, we could see a significant increase in the quantity of arms being ordered by governments around the world. And I think companies like Lockheed Martin and others are well placed to benefit from this increase in defense spending. And so if we look at Lockheed Martin, which is the light blue um, figure on this chart, you see Lockheed Martin has gone up quite a bit, plateaued a little bit, went down, but it's still up 26% for the year. Um, and I suspect there's even more to go, especially as the if the Ukraine-Russia war continues. But even if a ceasefire was signed tomorrow, I still think that some of these European countries, those in NATO, are still going to, pick sense and increase their defense spending. Now, the third and final sector that I think is worthy to consider investing in is quite surprising to many, but it's actually luxury goods. Now, I'm not a big luxury goods fan. Um, I think all the luxury brands that I bought it as gifts for someone else. um, but I think luxury goods, surprisingly, um, I think they could do well, and I've already started to do well in this environment. Now, at the start of the video, I mentioned that this sort of sectors that will do well right now, given the war and given the high interest rates, are those where people think that the goods and services they cannot do without, or they absolutely refuse to do without. And luxury goods falls into the latter. Now, no one needs a $10,000 handbag. Absolutely no one. But for a certain, what to say, category of person, a luxury handbag is almost a necessity, um, at least to them. And I think this is an area where, even though you may not love luxury goods, I imagine some of you guys might. I could think of a few people who really love luxury goods, but I think this is actually an environment for them to do very well. Now, listen, here's my thoughts on the matter. Luxury goods like makers like Prada, Hermes, LVMH, and some others. Now, their business model is predicated on scarcity. The reason why people um, salivate and really value and cherish luxury goods is because it's a status symbol. They are not mass produced, and their scarcity is what drives the desire for people's desire for them. So, in an environment where yes, goods, some of your inputs may be hard to get and may come at a higher price. Luxury goods are targeted to persons of higher income who, may not bat an eyelid of paying $6,000 for a handbag today, and then next week have to pay $7,000. In fact, they might not even notice that the price has changed. And so the ability to raise prices or to keep margin, to use, I guess, the technical term, I think the probability of that obtaining in this environment is very high for luxury goods as opposed to others, because some other goods and services targeted to more working class population, they will feel it in their pockets if you try to increase prices on them. But those targeted towards the high income earners, they may not even notice that the price has changed. So I think that is one good thing going for the luxury goods sector. So some of the goods and service providers like Hermes and others that I've mentioned have already started to post earnings. In fact, Hermes, if I pronounce it correctly, indicated in Q1 they actually had a major increase. I think it was on the order of like 15% increase in revenues from Q1 last year. So you see that this theory is starting to prove true, and it's only a matter of time before the market realizes it. And so this may be a good time, maybe a good time to, dip in to the temporary weakness that we see in some luxury good manufacturers. So if you look at Prada is the yellow line on the chart here. Prada stocks from the start of the year to now has been moderately flat, has been more or less flat, down like 1.55%, which is basically nothing at the start of the year. And so we see that unlike the tech sector, which has gone down tremendously, luxury good makers like Prada and some others have gone down or stayed basically flat since the start of the year. And I think it's only a matter of time before they rebound sharply. So I think this might be a good entry point to buy some luxury good manufacturers. I've already started, um, and I will announce which ones I started investing in another video. It's not Prada, a few others. But yeah, so these are the three sectors that we are looking to invest in the new fit in the near future. And I look forward to seeing you again on the next Finance Friday. Ciao.